Good morning, everyone. This is Joe from New York Trading Room.
And yet, the market took a different read and things rallied. There's 3.74 now on the 10-year, 4.7, as you can see on the 2-year. Bitcoin has been right around 29,000, either just above or just below 28,825. That shows it's just a gain of 3%. Depends on what you measure it from. It was at 25.5 in the last 5 or 10 days, at 25,500. So you can do the math. It's moved up about 12, 13, 14% just in the last week. But it's been volatile, but not as volatile as it obviously has been in the last 2 or 3 years.
Let's get over to Dom Chu. He's got a look at this morning's pre-market movers. And Dom, good morning.
Good morning, Becky. Good morning, Joe. So we've got an earnings mover that's driving a lot of the pre-market action and sentiment. We'll start with FedEx. The package delivery and transportation logistics giant is down nearly 3% right now, roughly 5,000 shares of trading volume. It reported mixed quarterly results. Profits came in better than expected, but revenues were also now below estimates. FedEx also offered a full-year profit outlook that was seen as disappointing. It continues to try to streamline costs amid weaker demand for key delivery services. So FedEx shares just down about 3% right now. Adobe shares are higher by nearly 2% on just around 20,000 shares of trading volume. The creative software and digital media company is getting upgraded to outperform by analysts over at BMO Capital Markets. It was a market perform before. The target price goes up to 570 from 500. They cited what else? The potential for getting new customers and market share through their new artificial intelligence, AI-related product offerings. So those shares up nearly 2% this morning on that. And we'll cap things off with a check on Tesla, which is up by over 1% right now, just over 1.5 million shares of volume. Now, that's despite analysts over at Barclays, who've downgraded the electric vehicle maker to an equal weight from a prior overweight. But they do raise the target price to $260 from a prior $220 in an acknowledgement of the strong run Tesla's already had above their target price. But they think that the recent rally has been too far, too fast amid near-term challenges to fundamentals for Tesla, as questions remain about profit margins there. So Tesla stock has been a juggernaut. Remember that big record 13-day winning streak that we've seen that added $240 billion, Becky. Tesla stock is still continuing that momentum. We'll see if it can stick that way, Becky. I'll send things back over to you.
Okay, Dom, thank you. Sure. Right now, we want to turn to the broader markets, and for that, we bring in Marianne Bartels. She is Chief Investment Strategist at Sanctuary Wealth. And Marianne, we have seen the markets run pretty hot. A lot of people starting to wonder if it's time for a pullback, but I think you're looking at things and thinking, look, this makes sense based on what you're reading, correct?
Yes, good morning, Becky, and thanks for having me. You know, the market, Becky, had traded in a range for almost a year. And we had a break out of that range either to the upside or the downside. And we made the argument we were going to break to the upside just because of positioning. Positioning was so bearish that we thought would break to the upside. You have to remember, markets don't peak on pessimism. They peak on optimism. And now what we're also starting to get is earnings estimate revisions are starting to get revised to the upside. Second quarter numbers still look negative. But looking out to third and fourth quarter, the numbers are getting positive. The market does not trade on the economy. It trades on earnings. So this market has legs. Yes, it's extremely overbought. We can get a pullback. But I still think this year is going to wind up being a very good year for investors.
You know, you look at things like FedEx and the warning that it issued last night, just for its earnings for the rest of the year. Normally, you would look at that and think this is going to be bad news for the economy overall because FedEx, as one of the transportation issues that you face, really can be a signal for the economy. Is this different because FedEx was dealing with, the change in consumer behavior after the pandemic? It's really hard to read these things at this point.
No, Becky, you're spot on. Yes, FedEx does have an issue. What's keeping this economy going is the consumer. And we all know that. And it's really the services side. And I know there's a lot of concern that, savings is coming down and we're starting to see debt. But that can continue. We're not at any extreme levels. We're not at negative savings. We don't have extreme debt, which means the consumer can still save. I don't know about you, Becky, but when I go out to dinner, every restaurant is packed.
Yeah.
many people going on vacation. So there's still money moving in this economy.
I guess if that's the case, if the consumer is still hanging in and still keeping the economy strong, do you think that the Fed is going to do even more? Additional rate hikes or keeping rates stubbornly high for an incredibly long time? That's the weird balancing act.
I do agree that they want to keep rates as high as long as they can and as high as they possibly can. And we're going to have to wait to see. Obviously, they signaled that we could possibly get 2 more rate hikes, but that did not derail the markets. And I think the reason why that did not derail the markets is the markets are looking forward and they're seeing that earnings are beginning to improve as a whole. And as you know, tech has been on a tear. This whole AI theme is really playing out. And I think the market is really more focused on the longer term than the very near term.
Marianne, where would you allocate money? Would you chase some of those technology names that have done so well? Would you look to other sectors that maybe haven't seen the same sort of gains to this point?
Since the beginning of the year, the pocket that we've really been focused on are semiconductors. I was a junior technology analyst very early in my career, and I learned the importance of the semiconductor cycle. And if you're in a cycle for semiconductors, everything else follows. And I still think that there's a long cycle for semiconductors. Another pocket that we do like is computer software and services. Now, I'm not saying to sell, the kind of FANG plus stocks, but, some of them are a little bit extended, a little bit pricey. I wouldn't necessarily sell them either because I still think tech is the leader. Tech is going to continue to drive this market higher, but I think you can broaden out and be specific in what you own and even go into other cyclicals. The cyclicals are really starting to perk up like industrials, and that's another pocket that I really like.
Marianne, thank you. Marianne Bartles.
All right, coming up, the CEO of the Trade Desk. Join CNBC's Julia Borston live from the Cannes Lions Festival to talk digital advertising and the future of AI. And later, it's been 10 years since Google acquired driving app Waze. Co-founder Uri Levine will join us to talk generative AI technology, the future of big tech, and the state of startups. We'll be right back.
في ناس عايزة الذهب. هحاول اشيل انا ضايف البترول دلوقتي، النيوزيلندي ين، اليورو كاد، الناسداك، الباوند، اليورو نيوزيلندي. ممكن نشيله ونحط الذهب تحت اللي هو دوت اليورو نيوزيلندي، طالما معظم الناس بتحاول تدور على الذهب. الذهب دلوقتي احنا بيع فيه وعامل 140 نقطة.
اما تبقى تخلص ابقى عايزه اغير لك هذا المسك.
Arkimco.com.
Julie Borson's in the south of France at the Cannes Lions Festival. She joins us now with a special guest. Another one. Julia, good morning. Good day.
Good morning to you, Joe. Yes, that's right. It's the afternoon here at the Cannes Lions Advertising Festival, and I'm joined now by the CEO of the Trade Desk, Jeff Green. Jeff, thanks so much for being here today.
Oh, thank you.
The Trade Desk helps various brands and agencies target and deliver ads basically across the internet, everything from connected TVs to mobile advertising and to ads on the likes of Walmart. So give us a sense from your perspective, what are you seeing in the overall ad ecosystem? Is there a contraction?
Well, so across the entire ecosystem today, there is more opportunity than there has ever been before. It's actually, I think, the best time ever to be in internet advertising, and it's largely because things like connected television have really come online during the pandemic, but then that's become much more ad-fueled. And then there's all these opportunities coming around retail, where we've created all these partnerships with companies like Walgreens and Albertsons and Dollar General and Kroger and so many others to provide data end-to-end so people know what advertising is working. There's just so much going on.
So part of your approach is this idea of a unified ID. So you could target ads and track their impact. You just announced that Walmart is on board. You also just announced a deal with Warner Brothers Discovery. What is happening with the growth of this unified ID, and how is that helping your business?
Yeah, so what advertisers really want to do is bring their data to the table so that they can make better decisions about who to advertise to. So especially if you have data about the customers that have already bought your product, you want to look for people in the world that look similar to them in terms of their interests and likes and preferences, so that you can use your ad dollars more efficiently. In order to do that, you need a currency, an identity currency, to know where the users are. And so Unified ID makes it so that companies like Warner Brothers or like Disney or like even companies like Snowflake or Amazon can take the logins that they have and put those to work, or enable companies that use their platforms, like in Snowflake, in Amazon's case in AWS, so that they can empower their customers who have data to use with logins or email addresses or phone numbers.
And so you just announced a new version of this for the EU. There's a big sense that the EU is really going to crack down on anything that is violating privacy. There's a push for the EU to crack down on Google's practices. And there was also a big lawsuit just filed by Gannett alleging that Google has anti-competitive practices. Google is your main competitor.
That's right.
What does this regulatory crackdown and this lawsuit from Gannett mean for you?
Yeah, so of course there's always lots of people looking at privacy and making certain that everybody's doing the right thing. We're very excited about the opportunity that creates for us to do the right thing for advertisers, brands, and for publishers. But then separate from privacy concerns, which have often been something that Google's under a lot of scrutiny for and has lost lawsuits over, there are also antitrust lawsuits from the European Commission, from the Department of Justice, from the Texas Attorney General, and then yesterday, a lawsuit filed by Gannett. And I think this is really significant. While they don't necessarily have the same leverage against Google that the Department of Justice or the European Commission has, I do think somebody who's financially dependent on Google filing a lawsuit, despite their financial dependence, saying that their practices are not fair, speaks to the government's case against Google, and I think shows a very significant, strong opinion from a publisher saying that the marketplace isn't fair and it needs to be fair.
Well, what do you think the potential outcome is, and how could that impact your business?
Well, so I think at the end of the day, a lot of people are criticizing Google for being judge, jury, defense attorney, prosecuting attorney, bailiff, warden, bail bondsman, all of these roles in the sort of justice system, and they just want it to be super clear of what they're doing and to essentially pick a side. I think it's likely that the remedy will be negotiated between them and government to make certain that they pick a side. But as I've said before to our investors, if we've been winning in an unfair market, imagine what we could do in a fair market.
Well, so what's next for the Trade Desk, though? Regardless of what happens with this regulatory approach to Google's business, you're adding more partners effectively. I know CNBC's parent company, NBC Universal, is a partner of the trade desk, but what is the potential to grow in a market that may not see as much overall advertising growth as we've seen in years past?
Well, I mean, overall, I do think advertising will continue to grow. I do think that advertising is the difference between success and failure as barriers to entry for companies continue to get lower, actually. And when you think about things like cloud and what that's enabled, you don't need infrastructure costs. It can scale it with variable costs instead of having to go buy a bunch of servers the way I did when I started in internet advertising 20 years ago. There's just so much opportunity for investment that I think we'll continue to see that. I think CTV will continue to climb and rise. I think there's tremendous opportunities in audio as Spotify continues to evolve its business model in advertising. I think there's just a lot of opportunity, particularly at some of the smaller walled gardens, as they call them, companies that have only bought and sold their own ads or sold their own ads to advertisers, as they open up to allow demand.
And who are some examples of those?
So companies like Pinterest or Roku or Twitter have historically been smaller walled gardens that I think are likely over time to open up.
And so in terms of what's next for you and for this industry, what is the biggest threat, and who do you think could be the biggest loser from all of these changes?
I think those that benefit are anybody that's on the open internet. So I honestly believe that as the market gets a bit more competitive and fragmented, particularly because CTV is perfectly fragmented, that creates opportunity for everybody except for Google and Facebook, who have benefited from simplicity and from having a very closed, protected ecosystem. But as the open internet gets more competitive and more compelling, it gets more dollars.
Certainly a lot of talk about connected TV here. There's a big Netflix logo. We have Peacock, CNBC's sister company, as well as Hulu, Amazon, all in the ad space now. So much going on in this space. Jeff Green, CEO of the Trade Desk, thank you so much for talking to us here in Cannes. Back over to you guys.
All right, thanks, Julia. Coming up, Uri Levine, co-founder of Waze, will join us to talk AI and the tech landscape. There he is. And here are the futures ahead of the opening bell on Wall Street. Squawk Box will be right back.
Time now for today's Aflac trivia question. According to Redfin, what percentage of homeowners have a mortgage rate below 6%? The answer when CNBC Squawk Box continues. Now the answer to today's Aflac trivia question. According to Redfin, what percentage of homeowners have a mortgage rate below 6%? The answer, 92%.
The latest read on weekly mortgage demand just in. Diana Olick joins us with more on that. Diana, good morning.
Good morning, Becky. Yeah, most mortgage rates fell for the third straight week last week, but mortgage demand did not move much. This after a big surge the week before, and this weekly volatility is likely because the overall volume is just so low. Now, the average interest rate for 30-year fixed mortgages with conforming loan balances decreased to 6.73% from 6.77%. That's for loans with 20% down. Now, interesting, the rate for jumbo loans rose to 6.8%, and that was the second straight week that it was higher than for conforming loans. And that hasn't happened in about 2 years. And it's probably because tighter liquidity conditions have prompted jumbo lenders to pull back, and that's increasing rates in the process, that according to an MBA economist. Now, applications to refinance a home loan fell 2% for the week and were 40% lower than the same week 1 year ago. Mortgage applications to buy a home increased 2% for the week, but they were still 32% lower than the same week a year ago. The continued drop in new listings of homes for sale, that's keeping overall sales low. But FHA demand actually rose more than conventional loan demand, which is at least a sign that first-time buyers who generally use FHA are still trying to stay in the game. Becky?
Diana, did it surprise you that 92% of Americans who have a mortgage rate below 6%? I guess I'm surprised, but
Not
I
at
think
all.
maybe not as much. Yeah.
No, and in fact, it's pretty high, the number who have a mortgage rate below 4%. So it goes even further than that. And that's why nobody wants to sell their house right now. That's why nobody's putting their house on the market, because they don't want to trade perhaps a 3% mortgage rate for 6 or 7.
That's what happens when the Fed raises 500 basis points so quickly like that. Sticker shock sets in. Diana, thank you.
All right, still to come, Chinese spies are targeting corporate America. Eamon Javers has an inside look at the response from Capitol Hill. And then is social media harming children? An industry expert weighs in on the Surgeon General's extraordinary warning to lawmakers. First, though, it's the 10th anniversary of Google's acquisition of Waze. We're going to talk to Waze founder Uri Levine about the evolution of AI. That's straight ahead. Squawk Box will be right back. been 10 years since Google acquired driving app Waze, one of the first consumer-facing products to leverage AI and machine learning. Joining us now, Uri Levine, co-founder of Waze and author of Fall in Love with the Problem, Not the Solution, a handbook for entrepreneurs. It was a big acquisition at the time, biggest, I think, at the time of $1 billion. Spend it all. Got anything left?
You know, it was the biggest acquisition for an app ever, and Facebook acquired WhatsApp for way more, but that was later.
Ways more. Ways more. And you've parlayed. I'm sure you're involved in so many things now. It's exciting. What do you have? What is it that makes you do this? Who you are? How can other people do it? And I guess it's in this book, right? Fall in love with the problem.
It's really simple. My destiny is about value creation. And I find multiple ways to create value. So Waze or Moveit or Applique or different startups that I'm building, that all of them are about value creation, is one way. I'm also ended up to be a teacher, or sort of a teacher, and so I feel equally rewarded if I build stuff myself or I guide someone to build it. And the book is fulfilling my destiny as a teacher and sharing my know-how with many other business people and help them to become more successful.
You can't take it literally, though. Fall in love with the problem. I mean, what good is examining the problem if you're not
very simple. Just imagine that we will be here in 2007, right? Just before we started Waze, and I will tell you, you know what? I'm going to build an AI crowdsource-based navigation system, and you're going to say, yeah, very interesting, but you don't care. Right. If I will tell you I'm going to help you to avoid traffic jams, then you do care.
Is that what happened? You work on things that drive you nuts, things that you want to.
Exactly. I get frustrated from stuff, and I basically ask myself, is there a way that I can change that? And then the next thing that I'm going to do is actually ask a lot of people, if this is an issue for you, if this is a problem for you. And I always tell people, look, start with a problem. Think of your problem, a big problem, something that it's worth solving. And then ask yourself, so who has this problem? If you happen to be the only person on the planet with this problem, you know what, go to a shrink. Way cheaper and faster than building a startup. But if a lot of people actually have this problem, you want to go and speak with those people and understand their perception of the problem. And only then go and build a solution.
So what else, besides having traffic problems, has driven you nuts to the points that you've actually done something?
You know, one of my more successful startups these days is Pontera. Pontera is actually focused on retirement plans in the US, right? So 401k, and help people to retire richer. You think about it and you say, wait a minute, this is a major mission. This is something that it's worth solving, because most of us, if I would ask 100 people on the street, what is your 401k investment at? They will tell me, I don't know. But I do know. In the default, that was the default when they joined, right? And so no one is looking at it and saying, okay, wait a minute, this is my retirement saving. I need to make sure that the return on that is the right one, right? And so we are pretty good in looking at stuff that is around the corner, and we fail to see the further away future.
There are quantum leaps in technology. Suddenly AI, it was 10 years. It wasn't on everyone's lips when you started Waze. What changed, do you think, in the last year?
So very interesting, right? So we all heard about AI as soon as the OpenAI ChatGPT came about, and that was about 6 months ago, right? Before that, we never heard that. And all of a sudden you say, wait a minute, they started in December and everyone is using it, right? And I would say, wait a minute, they're 6 years old. It's a long journey to create this value, and it's still not there, right? Because if we will speak with a lot of people at that, and I would ask them, okay, have you tried ChatGPT or any other, language generation AI system? Then many of them are going to say yes. If I would ask them, are you still using it? Most of them are going to say no. The use case is still to be determined. Now, this is a language model, right? So for everyone that is generating content, very important, right? And you can actually increase your productivity by 10x or 5x and become way more successful using these tools. But if you're not in the space, then you haven't found the use case yet. And I think that we will eventually. We will find different use cases that will increase productivity and will make the world a better place.
How do we, I mean, it's out of the, genie's out of the bottle. It's a little late to decide. It could be dangerous. It could be dangerous near term. Do you believe it could be dangerous long term to the species? Or is that all science fiction?
You know, a decade ago, when we thought about AI, we spoke about autonomous vehicles. Right?
The what?
Autonomous vehicles, right? So cars that can drive themselves.
Autonomously, yeah.
And obviously, we are 10 years later, and they're still, most of the cars that we are seeing out there, they actually have drivers, right? So we are still not there yet.
Mm-hmm.
And there, the value is clear, right? Because it's going to save us time, right? We don't need to sit behind the wheel. We can sit in the back seat and do whatever we want. And still, the challenges, some of the challenges is what if, right? What if something bad happens? Right? What if there is an accident with an autonomous vehicles, and we, in general, when we think of something bad happens, then we're looking for someone to blame. And we should actually do it differently. We should think of something to repair rather than someone to blame. With AI, it's going to be the same. They will be.
Somebody dies, though. That's the difference. You can't look for something to repair after you've lost human lives. That's the danger.
We're talking
That's
about,
why it's taken.
we're talking about everybody dying, not just somebody dying. I mean, I'm, way out there. It passed the singularity. Machines know 1 trillion times the sum of all human knowledge. Kurzweil, you've seen that.
Historical knowledge, right? Not
everything. But that's still doesn't equal what we have. In your view,
it's not.
It doesn't. We're pretty special then.
It's not. It's not equal. Not even close.
Really.
In probably never. Right. The ability to actually, creativity, imagination.
Yep.
Recreating stuff. Even though that I've seen the different models of GPT creating stuff that is not fact-based, but is language-based, right? And so they will make up things.
But if 50% of teenagers already are depressed from social media, and then you throw in the negative possible outcomes you see from AI, we need to be careful, don't we? Or are there regulations that we need? We're afraid to regulate it because we don't want to get behind everybody else.
I think that we do need regulation, but what the regulations should do right now, just wait and see, right? Because for social networks, I would say, wait a minute, there is a major impact on our life, and we should have regulation here. And in general, at the end of the day, you look at the media and you say, okay, wait a minute, it's Google and Facebook that controls what we get.
So that's interesting, because we're going to have a segment talking about this too with the social media networks. You do think they need to be more regulated, and
I think it should. I think that there is too much power for anyone will eventually become devastating. It needs to be regulated. And I think that the model of countries is way stronger than the model of corporates. Because corporates have one agenda, right? Make more money. And they have no social code, and governments occasionally do have social code.
I've started, when I see the cop, I've started alerting people. And do you do that, Becky?
Oh yes, on Waze.
And I get a lot of reward points. It goes ding, 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 and I feel really, really good about it. So that was smart to do that. But it wants me to go buy a backpack like 20 miles out of my way. I don't even want the backpack. But I still like getting the points. You know what I'm talking about?
Yes.
You do that?
The Waze rewards, yes. Is the car still there? Yes.
There was, I lived in Los Angeles back a while ago. Was always afraid to leave the freeway. Always. No, I can't leave the freeway. No, I can't leave the freeway. And I just sit there like a robot. This all of a sudden, man, I'm everywhere. I got shortcuts through here. I'm in residential.
It has turned quiet. Formerly.
I know it does, but you can leave the freeway.
When we started.
Oh boy, how are you doing? We don't have any fun anymore, but Greco at least brought that. Yeah, that's me in LA traffic.
Yeah.
Which almost is so bad, it almost makes up for the nice weather. It almost offsets it.
So I will say two things, right? So number one, when I speak with people around the world, everyone tells me, oh, you don't get it. Our traffic jams are the most severe they are, right? And
DC is pretty bad. I found out. I doubt it.
You know what? U.S. in general is pretty good.
Relative
Just
to-
think of Latin America, think of Asia, think of India, think of Jakarta.
China is second to that.
China is actually, they can work hard and change things, right? They actually control, and therefore they can change the traffic behavior.
Lori, it has been a pleasure having you
Good to
here.
have you on.
We hope you'll come back. The book again, Fall in Love with the Problem, Not the Solution. Thank you.
Thank you.
When we come back, how China's spies are trying to steal U.S. trade secrets. Eamon Javers will join us right after the break with a preview of a new CNBC documentary that premieres tonight. Squawk Box will be right back. President Biden referring to China's President Xi as a dictator during a speech last night. Those comments came just days after Secretary of State Antony Blinken met with Xi and other Chinese officials in an effort to try and lower tensions between the superpowers. Beijing firing back this morning, saying that Biden's reference, in their words, was extremely absurd and irresponsible and amount to political provocation.
In a new CBC documentary, Eamon Javers has a rare bipartisan interview with the Democratic and Republican leaders of the Senate Intelligence Committee about how China's spies are trying to steal U.S. trade secrets.
Today, the world we live in, the world we've all benefited from, was a world framed by an American-led order. Now, if they are dominant in these fields in the 21st century, the entire world will be responding to Chinese standards, which is leverage in and of itself over geopolitics, over decisions that policymakers can make, over society.
The old notion of 20 years ago what national security was, and who's got the most planes, tanks, ships, and guns, is no longer the case. Who has the most advanced wireless communications? Who controls overhead satellites? Who is going to make the most advances in synthetic biology or controls next generation energy? That is all within the gambit now of national security.
That was rare. Even more rare, Eamon Jeffers is in studio.
Here on set.
Here on set.
In person with my jacket on. I didn't go jacketless like you.
You could, if you want. You've got a nice figure. It wouldn't matter.
I need a little help. Just cover it up a little bit.
We'd like to see your Lululemon pants that you...
Never. I'm holding the line, Joe.
I know you are.
Yeah, I won't wear sneakers with a suit.
All right, fine. Feel uncomfortable. Have things crushed.
Right. Look, this interview with these two guys was just a fascinating opportunity to sit down. It's the last bipartisan issue in Washington, D.C., right?
Together, but it makes you feel like this must be something that is very, very important.
Yeah, they really cared. They wanted to do that interview together, side by side, to send a message to the country that this is not a Democratic or Republican issue. This concern about China and what they're doing to corporate America is really front and center for them. And we got started on this documentary back in October. We were starting to work on this, and we've been talking about it for a while because my sources in the U.S. intelligence community kept coming to me and saying, we think corporate America doesn't get it. Corporate America looks at the Chinese espionage threat as, okay, they're stealing some IP, they're causing problems, this is going to cost us money, but basically they're stealing to catch up to us, and we're ahead, so things are fine. What U.S. intelligence is saying, and I think what comes through in the documentary, is that the threat is a lot more existential than that. The stealing that's going on by China is about stealing to then subsidize a Chinese state champion company that will then go on to displace the American incumbent. So they're not trying to steal to catch up with you. They're trying to steal to kill you. They want to take those corporates off the chessboard.
Is this stealing from companies that do business in China, or I mean, is the goal from intelligence to try and get companies to stop doing business in China, or is this a problem that's going to happen whether you're operating in China or not?
That's a good question. I asked Christopher Wray, the FBI director, that exact question in the documentary. He says, we don't want you to stop doing business in China, but we want you to be a lot more careful about how you do it.
How can you do that?
Well, the central case in the documentary that airs tonight at 10 p.m. on CNBC is a case of GE Aviation, right? And there was a Ministry of State Security spy in China who was targeting composite fan blade technology that GE Aviation had that's absolutely crucial to the economics of a modern jet engine. And what this spy did was he found the exact engineer inside GE in Ohio who had this information and who had family back in China and targeted that guy under the auspices of a Chinese university, inviting him back to China to give speeches, talking to him about getting access to his laptop.
How do you protect yourself from a situation like that? I mean, the answer to that is what? You can't hire any Chinese corporate people? I mean, that's setting up for xenophobia.
Right, that's not a good answer.
That's crazy.
No, what the FBI will say is the way we protect against that is you work very closely with the FBI. And in this case, GE did work with the FBI. They found out that this engineer had been traveling to China and had not been disclosing it to GE. They met with the engineer and they said, we understand that you're the target of a Chinese espionage operation. You can either face the consequences for what you've done so far, or you can work with the FBI. And the engineer inside GE became a double agent. And they flipped him, and the FBI sent him back to the Chinese. So the Chinese thought, he's still our guy, he's going to give us the secrets. He's talking about downloading his entire laptop with all the secret plans on it for the Chinese. They didn't realize he was working for the FBI the whole time. I won't give away the end of the story. They did send some fake plans. GE worked up some bogus docs.
So how do you...
And when the Chinese agent traveled to meet with him, the Chinese had on their phones lots of pictures of this guy's family, right? Which is leverage, right? And so there are real concerns here in terms of the espionage that's going on. But what folks told me was the target of that operation wasn't even really GE Aviation. The target of that operation was Boeing. Because if you can steal all the different components of a commercial jetliner, you can build one. They have a company called Comac in China. You can subsidize Comac, and you can really threaten Boeing, not just their market share, but Boeing's existence, right? If you come out with a corporate jet program that can sell jets for half what Boeing can, or 3/4 of what Boeing can, where's the global market going to go, right? If the components are the same, the safety is the same, why not buy the cheaper one?
You shouldn't be under any illusions. I mean, they have 1.5 billion people that they think they want to bring into the same type of prosperity that we have. So do you blame them? Are there any international rules for the way businesses should behave? And if there aren't, then we just have to take the same tack. We need to fight fire with fire, but we shouldn't be under any illusions that they're going to be nice about things.
I interviewed a longtime veteran CIA officer named Jim Olson for this. He was undercover in Moscow in the 70s and 80s, like a total Mission Impossible spy guy, counterintelligence expert. And he said what he would be doing right now is flooding the Chinese channels with double agents, just like this operation that we detailed in the documentary, because you keep them on their toes. They never know what's real, what's not real. It wastes a lot of their time, and you learn a lot about their operations. So in his view, what the CIA should be doing is just sending a lot more corporate double agents back into China and confusing the channel with information.
That there's going to be goodwill, or, oh, they wouldn't do that.
Look, corporate espionage has been with us since there's been corporate
I don't think there are any rules.
Look at the cotton gin, right? I mean, all these legendary things going back to the time immemorial.
Business.
Yeah, you got to protect yourself. People steal when there's somebody who has an advantage over them.
Good teasing.
Good.
Thanks. 10 o'clock tonight on CNBC.
Thanks, Eamon. Tune in to that new documentary. As you heard, China's corporate spy war premiering tonight at 10 p.m. Eastern, only on CNBC, starring Eamon Jones.
When we return, is social media harming children? An industry expert weighs in on the Surgeon General's extraordinary warning to lawmakers. We'll be right back. Teens are experiencing record levels of sadness, violence, and suicide risk. That's according to a recent report from the CDC, which also found that girls and LGBTQ teenagers are disproportionately affected. Experts are pointing to social media as a primary factor. The U.S. Surgeon General warning lawmakers in May that social media is a main contributor to these elevated rates of depression. Joining us right now is a psychologist who studies this connection, Jacqueline Nisi, who is an assistant professor of psychiatry and human behavior at Brown University. Jacqueline, first let's talk about this, the incredible increase we've seen in depression levels with teenagers. Do you tie that directly back to social media, or are there other factors at play as well?
Yeah, so thank you for having me. I think that the research on this issue is really still emerging. So there are a lot of open questions about how social media use impacts mental health among teens. I think what we can say from the current evidence is that the impact of social media on mental health really depends a lot on how it's being used and also who's using it. So we know that there are both risks, real risk to social media use, but it's not all bad. There are also benefits, and the impact it's going to have is really going to depend on how it is being used by an individual teen. What I think that means for solutions is that we really need to be thinking about how can we maximize the benefits that we see of social media for teens while minimizing these risks that we really know are present on these platforms.
The U.S. Surgeon General really taking a pretty extreme measure, saying, we know that almost every teenager uses social media. We don't have any idea if it is safe. And I think the next step is that the Biden administration is saying they're going to take a year to try and figure out what guidelines, what regulations should be set. Look, this is also fueled, though, by the Facebook papers, the research they did themselves and then chose not to release that showed that there was a very significant impact on teenagers using it. What should we be doing as parents, as a society?
Yeah, so the Surgeon General's advisory really recommends that we take what they call a safety-first approach to addressing these issues. And this is something that we already do for other products, things like cars, even children's toys, where until we can really prove that these products are safe for youth, we're putting protections in place to minimize the risk of harm. And I think that's really important for us to do in this case as well. There's also a lot that we know parents can do. Of course, though, we know that this can't be on parents alone. It really has to be a multifaceted effort, from legislative efforts to the tech companies themselves. But a few things that parents can do are things like communicating with their teens about how they're using social media, asking a lot of questions. They can be setting some boundaries around the amount of time they're spending and types of things they're looking at. And they can also be, modeling the types of healthy social media behaviors that they want to be seeing. We know that the parents use social media plays a big role in how their teens will use it as well.
Jacqueline, we're almost out of time, but if this is a bigger societal problem, if you can't fix it alone as a parent because you're basically just cutting your kid off from the lifeline every other kid is using, and Surgeon General is saying this should be a safety first, why the lack of urgency? Why the idea that we're going to take a year to think about it and then maybe we'll give you a few guidelines that you might be able to follow, maybe should do something? Why this lack of urgency?
I think this is a really tricky issue, and I think that we don't necessarily have ideas for the best solutions on how to address this. At the same time, I do think that there are some common sense steps that tech companies can take to address these issues. So I think that they can be really prioritizing kids' safety and health as a first principle in designing their platforms, and that's going to include things like protecting children's privacy on the platforms, enforcing age minimums. And I think these things are going to be really important to move the needle.
I'm sure they'll talk a lot about it. We'll see if they actually do anything. Jacqueline, thank you.
Thank you.
I mean, we're adults.
We're adults, and it gets to us.
The Twitter, because some of it gets me is the inanity and some of it is just so.
The meanness.
But it's mean, but what it's based on sometimes is just so. But also
Then take that and put it on 13.
That's what I mean. They don't know how to really handle it yet. There's no good answer. You can get bullied at 1 a.m. You can leave school and you are never safe.
Right.
You're never safe.
For the life of me, I don't understand the lack of urgency. Like the idea that we're going to say, hey, maybe you can do some things. Maybe you should or could do it. Maybe we can think about it. This is more than a decade after the horse left the barn.
Right.
Still not think about it.
I mean, my teeth were white at one time. I understand. I've decided not to get to split the diastema. I've decided not to get that fixed. My decision. We'll be back. It's like, I'm fine. It's right. Good morning. Investors standing by for new messages from Jay Powell, the Fed chair set to testify in the House today. And ahead of that, we're going to speak with the chair of the White House Council of Economic Advisors. Renewed tensions with China, that country firing back after President Biden called his Chinese counterpart a dictator. And more demand issues for FedEx. Details on the company's fourth quarter and the results are straight ahead as the final hour of Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan. Andrew is off today. Been watching what's been happening with the U.S. equity futures, and there has not been a ton of movement. We've been a little above the flat line. Right now, we're a little below the flat line. Dow futures off by about 17 points. S&P futures down by 3.5. The NASDAQ off by about 25. Of course, we are waiting for some testimony today from Jay Powell. That could influence what you see with markets later in the day. In the meantime, the 10-year is sitting right at 3.7%, the 2-year at 4.7.
Today's top stories. New heated words between the U.S. and China. Speaking yesterday at a fundraiser about the Chinese spy balloon that we shot down in February, President Biden referred to China's President Xi as a dictator. And a spokesperson at China's Ministry of Foreign Affairs responded today calling Biden's comments ridiculously absurd and irresponsible. And this all follows last weekend's visit to China by U.S. Secretary of State Antony Blinken, during which Blinken met with Xi and spoke about stabilizing ties between the U.S. And China. And sticking with this story, in general, the country of China unveiling a more than $70 billion package to boost sales of electric cars over the next 4 years. Chinese EV makers are higher on that move. And rounding out a trifecta of overseas headlines, British inflation coming in hotter than expected in May. The core number was up 7.1% year over year. That's the highest rate in 30 years. The number will keep pressure on the UK government and the Bank of England to try to tamp down high prices.
All right, let's get over to Dom Chu. He, again, has been taking a look at some of this morning's top pre-market movers. And, Dom, what's catching your eye right now?
All right, so we'll talk about a couple things that Joe mentioned in the open right there for the top of the hour. We'll kick things off with an economic bellwether stock that's very much a topic of interest on trading desks and amongst investors today. That's FedEx. The stock is currently down just about 2.5% pre-market, around 25,000 shares of volume. The package delivery and transportation logistics giant reported profits that beat estimates, but the revenues missed expectations, and FedEx also gave a full-year profit forecast that underwhelmed Wall Street. It continues to deal with slowing demand for shipping and a cost-cutting campaign to try and operate more efficiently in that kind of environment. So overall, unbalanced FedEx shares down 2.5%. On the analyst front, we've got some movement in shares of Spotify, up about roughly 2.5% right now, just around 12,000 shares of volume. The streaming music and podcast company is getting upgraded to outperform by analysts over at Wolf Research. It was previously a peer perform. They also call it their top idea in subscription-based companies, due in part to expected revenue growth acceleration driven by price increases and new subscriber additions. So those shares getting a bid partly because of that. And we'll end with a check on the bank stocks, which are all relatively calm ahead of Federal Reserve Chairman Jay Powell's twice-a-year testimony before Congress on monetary policy. Shares of the big money center integrated banks like J.P. Morgan Chase, Bank of America, Citigroup, all just fractionally higher ahead of the opening bell, and Wells Fargo just about fractionally lower. There is not a huge expectation that Powell will make any comments that are out of line with recent views on inflation or policy. Remember, he is slated to appear before the House Financial Services Committee at 10 a.m. Eastern Time, and the Senate tomorrow. Joe, I'll send things back over to you.
All right, Dom, thanks. And on the same day last week that our next guest was confirmed as the White House's top economist, we learned annual inflation cooled in May to 4%, the lowest rate in more than 2 years. Joining us now, Jared Bernstein, chairman of the Council of Economic Advisors. Jared, it is global. And what I don't really understand in the UK is why they're just now seeing a peak in the core when we saw a peak months and months ago, and it made some steady progress. Not enough, obviously, but what's going on globally? I guess it's supply chain and pandemic related.
I think supply chain pandemic, but also, of course, the war in Ukraine. That's affected economies there and here, but just based on proximity, they're going to be more exposed. It is the case that at this point, we're getting more, considerably more disinflation than any other of the G7 countries. Part of that is exposure to Ukraine, and then I think part of that is policy as well. Of course, the president has really leaned in to policies that are designed to help ameliorate some of the price pressures, particularly around prescription drugs, maybe energy, insulins and things like that. Obviously, investments in the supply side. So I think probably both policy and proximity to the war in Ukraine.
Jared, the success has 1,000 fathers, failure, I don't know, whatever the expression is, but whatever you want to attribute our strong economy to. I mean, I attribute it to some of the initiatives of the prior administration. I know that you probably don't. You like all the things that the Biden administration has done, but it is a pretty strong economy, and that's good.
Yeah.
What the Fed's trying to do, I know you want to let them retain their independence, but there's one thing that, and this is going to be a sore subject, 24 straight months workers have made less in terms of real wages because of inflation. Now, the president glosses over this and says he just uses he doesn't use real wages. He just uses actual wages and says everybody's getting a raise. You tell him that that's disingenuous? You say, don't say that, it's not true?
I disagree with you, not with the president. And let me correct a misimpression. The president has consistently, and be happy to provide you and yours with evidence of this, has talked about real wage gains, particularly over the last 6 to 7 months, but most recently, and you could look at this on his comments when the last inflation report came out, on a year-over-year basis. This is actually the first time in a couple of years, this is with the May inflation print, that year-over-year inflation rose less than wages. So wages grew 4.2%, inflation grew 4%, 2/10 real wage gain. Now, I'm not saying 2/10 is gangbuster real wage growth, but it is real wage growth, and that's been that's a fact over the past year. Now, look, you said something else that's really important, and it ties into the real wage growth story, and that's that this is a solid, it's a strong economy. I think at the heart of that is the American consumer, who you should never bet against if you haven't learned that by now. And the fact is that we have a pretty nice flywheel going, where the very strong labor market, along with some excess savings from some policies that the president helped to implement when he got here, has helped to fuel strong consumer spending. That's led to strong labor demand, and that feeds back into money in wallets and purses, and that's helping to drive consumer spending, which is almost 70% of the economy. So that virtuous cycle is underway, and yes, I do think the rescue plan has played a role in that.
Well, okay, Jared, so you're telling me the president was only talking about the most recent report because dating back to April of 2021, there were 24 straight months. This is according to the Bureau of Labor Statistics. 24 straight months where hourly earnings fell after adjustments for inflation. So you got 1 month or 2 months versus 24 straight where workers earn less.
Yeah, no, in fact, again, real wages on a monthly basis have been growing for the past few months and on a year-over-year period as well. Now, look, I think it's important to recognize what we're talking about here in terms of economic dynamics. I mean, the thing we'd like to see is for wage growth to remain robust, but of course, the Fed wants to see the labor market, supply and demand come more into alignment, and I understand that. What we'd like to see is price growth decelerating, slowing more than wage growth, because that gives kind of a sweet spot kind of result. And that's what we saw in May, and we'd like to build on that progress.
What do you think we need to do long term, Jared? Is it on your radar screen in terms of the size of